All right, we have quite a few folks in the room. Thank you so much for joining and kicking off the 2025 new year. And I will start off by doing a really quick intro of ourselves, and I will hand it over to Kiyoshi to talk about integrated CPA and accounting services. So you folks are here because you heard of Casual Portal, and just a quick introduction of my background. I was a software engineer, became a general partner, had about 1,000+ units as a lead sponsor. But 2 years ago, I stopped being a real estate GP to focus exclusively on building the software for commercial real estate. Now, my mission is to help everyone achieve financial freedom. And we start off doing that by focusing on the active side of financial freedom. So that means if you're a GP, you're trying to raise money, you need a CRM, you need underwriting, you need an investor portal, you need to make your LPs happy. And so we're building all these tools, an ecosystem with the technology to help the GP succeed. And so this call is about the CPA services. And we have a lot of customers, and from our customers, we kind of get a sense of who they like as their CPA. And Kiyoshi and VSV Vertical Street Ventures CPA really stood up to us. Some of our best customers use them. Okay. So a little bit about Kiyoshi. Kiyoshi went to UCLA, lives in California. He's the founder of VSV CPA, and I met Kiyoshi about 3 years ago. And we were in touch, and then about last year we were sitting next to each other at the Best Ever conference. We both were sponsors on that event, and we kind of start talking more about kind of how we can partner together. And the catalyst for me was we are branching into fund administration. So we're really good for syndications. And then when you get into funds, it's a little bit more difficult, because even if you're like an indirect fund of funds, or you're doing a customizable fund and you're investing a bunch of underlying funds, you need the financials, right, from these funds to prepare the financials at your fund level. And then you want to share these fund financials with each one of the LPs. Well, that has actually two parts. One is the CPA, the tax attributes that you can make to make that happen. And then second is sharing that information with the LPs. And so the fund admin is basically a combination of bookkeeping and the investor portal. And by combining them, it solves a huge issue. And Kiyoshi will talk more about that. But yeah, everyone, this is really great. We have a lot of folks joining. I'm very excited of kicking the new year's. This is a very timely webinar because it's January, and this is when you want to choose a CPA. So whether you are a general partner as a syndicator or a fund manager, whether that's indirect fund manager or a direct fund manager, you will benefit tremendously from this check. Okay, so give an introduction for Kiyoshi. Maybe Kiyoshi, you can take away. Kiyoshi, you can actually unmute, and then if you couldn't share, I will just make you the host so you can share.
Awesome. Thanks so much, Perry, and thank you for having me. I will share my screen. All right. Well, thank you again, Perry, for having me. I'm excited here to talk about our integrated bookkeeping services with Cashflow Portal and then my practice, Vertical CPA. So Perry gave a great kind of bio on me. I have a little bit pre-prepared here as well. So a little bit of background on myself and then my practice. So my name is Kiyoshi Simon. I'm a CPA. I also have my master's in taxation. I'm actually a real estate investor as well. So I started my real estate investment career a little over a decade ago. I started by purchasing really single family housing, and then by doing what's called house hacking. And I would actually rent out rooms to tenants and just kind of save my money, reinvest in the stock market, redeploy into single family, and just kind of rinse and repeated. I'm also a certified public accountant. I've been in the public accounting industry now for over a decade. And really critically throughout my entire career, I've been real estate specialized. And the reason that I would say that's so critical, especially now, is because the level of complexity that tends to come with real estate and partnership taxation is significant. Just kind of as a really quick bio, right? I can buy a property, my neighbor could buy the same property. How we treat that property is going to have very different tax consequences, both in terms of optimization and opportunity, as well as tax and reporting, even though it could be the same asset. And so there tends to be a very high level of complexity with real estate accounting specifically. And it's one of the reasons that I'm happy to say that I'm specialized in it, because it's all we do. I'm also a business owner, as Perry alluded to. I'm the managing partner of Vertical CPA. I also started other businesses in the past, started with a tutoring company, sold that off, and have started kind of growing ever since. Fast forward to today, Vertical CPA, we've been in business for a bit over about 3 to 5 years at this point. We are a real estate specialized tax firm. What I mean by that, again, most firms tend to be like 20 to 30% real estate. We're closer to about 90%. And within that 90%, we're very deep into real estate. So we certainly have the mom and pops and the duplexes, but we tend to work much closer with very large portfolios, large syndication and investment firms, land entitlement, development, parceling, all of that within the real estate guys. But it's an area that we're very deep into because, again, you kind of have to be. And with that, we like to offer comprehensive services, all tailored to our real estate focus and niche. So, of course, tax preparation and compliance, but even beyond tax preparation and compliance, consulting and planning. So rather than having conversations with clients about what they sold last year and what the tax is from last year, we really prefer a forward focus. So having discussions about what you want to do or what you intend to sell and how we can start mitigating taxes ahead of the curve before the dust settles. And so that proactive approach, I think, is really critical in real estate and ultimately business. And then, of course, bookkeeping and accounting, which, as Perry alluded to, is a huge need within the industry. It's one that we vertically integrated based on feedback from our clients and based on feedback from Perry. We are excited to kind of launch an integrated service with Cashflow Portal as well. So with that, as we've kind of alluded to, there is a significant problem that both Perry and myself have noticed. And put simply, the problem is that the financial statements that many of us look at may appear accurate, but typically lack CPA oversight, which leaves you exposed to reconciliation issues and ultimately make your financial statements not tax ready. And this is a big challenge. Most of us tend to be very sensitive to the profit and loss statement, and we understand how the profit and loss statement works. We tend to have a lot less experience with the balance sheet and the statement of cash flows, and then particular accounts within those statements, such as the equity or capital accounts or fixed asset accounts, that have very, very significant impact on not only our financials, but also our tax work. And so there's really a disconnect there that we've been working on solving. And while sometimes people can dismiss these challenges as kind of accounting issues and, hey, the CPAs will fix it, these have really significant impacts to you as sponsors and business owners. I've kind of listed a couple of specific items here, but the ones I really want to call attention to are delayed and late Schedule K1s for our investors. That can have a significant damage to firm reputation and investor confidence. One of the things I'm happy to say is in my decade of experience, we have never missed a 315 deadline. Yes, that's not luck, it's planning. We like to plan things out in advance with our clients, make sure that they're set up for success. And so good outcomes are really the product of preparation. The other big issue that we've noticed tends to be increased audit risk and then inconsistent reporting across assets. And those tend to be hand in hand. So when you have inconsistencies and variances, it tends to lead to higher audit risk and potentially a negative adjustment, which is not only costly, but again, it damages firm reputation and investor confidence if you have to do something like amend a tax return, deal with a negative IRS adjustment, or some combination thereof. And as we start to look at funds, these problems really become exacerbated. If I can skip to my next slide. If you have a fund, and I have kind of a basic fund here that I've outlined with just 3 assets, so multi-asset fund, 3 different investments, the problems tend to be pretty readily apparent, right? If we have 3 different assets across 3 different geographies, or even just 3 different property managers or 3 different property managing accountants, you'll have 3 different sets of financials. They don't typically talk to one another, for lack of a better word, nor are they consistent in how they record transactions. So even basic things like capital expenditures, repairs and maintenance, different property managers will do them differently. And while there's nothing inherently wrong with that, the problem then comes for you as a fund operator when you have to consolidate and centralize all that information, because now we're comparing apples to oranges to bananas, right? And so there needs to be some kind of uniformity so that you have uniform reporting across your financial statements, both for yourself as business owners so that you can make sound financial decisions, but also so for your investors so that you can produce consistent and coherent financials on a monthly or quarterly basis. And then, of course, going into tax, you want to make sure that everything is consistent so that your financials are tax ready, right? One of the big challenges we see, especially with funds, is that there's a large discrepancy between different funds and how they kind of communicate, which creates a big issue when it comes to tax optimization and reporting. And so the solution, put simply, is end-to-end accounting integration. Again, I would say this is especially important for the funds that have those inconsistency issues across asset classes. But put simply, end-to-end accounting integration starts with integrating us as CPAs into your existing accounting systems. Now, accounting systems is kind of a wide umbrella term. We do work with all of the major accounting software systems. So the Yardis, the Rezas of the world, the Xeros, of course, QuickBooks, all of those we work with. And we work at pulling and extracting financial data on a monthly and quarterly basis, and then making sure that everything within that financial data is it's made consistent, which is easier said than done, but we convert everything into basically a common language so that you can have consistent financial statements. We consolidate everything into QuickBooks to make sure that you have sound accounting and reporting. We review that data to make sure that there's no significant issues there that we need to address now, right? Again, we don't want to address these issues come tax time because that's when we're all busy. But if we can address those issues now, fixed assets, repairs and maintenance, capital account, equity distributions, it's always best to do so in advance. And so we like to do a review of all those kind of key problem areas that we typically see. And just to quickly kind of address probably a little point of resistance that I imagine some people might think, they might be saying, hey, I have a property manager accountant who is doing all this, right? Are you telling me that they're not doing their job? And put simply, it's not that they're not doing their job, but they typically tend to be focused on accounts receivable and accounts payable. So making sure the right funds come in, making sure bills and expenses and checks go out. But what they're not focused on is the macro and making sure that everything here speaks cohesively and kind of makes sense at a high level. And certainly, again, if you're operating a fund with different assets, that problem tends to get exacerbated. And so we go through, we review, we make sure that everything is consistent and coherent. We consolidate said financials. And then what we do is we produce this really nifty monthly and quarterly financial assessment report for clients. And I have a little bit of a screenshot here that I've included on this slide, but you can kind of see it's a nice little deliverable. We have a nice table of contents that kind of breaks down everything in that packet. And effectively what we have here is all of your critical financial statements, balance sheet, income statement, general ledgers. For our fund accountants, we tend to also like to include a T12 broken out by class or by fund for easier line of sight. And then, of course, we have our summary analytics and then our footnotes that we provide. And included in that, depending on what we're seeing, we'll also provide adjusting journal entries to your property managers so that they can record journal entries to fix their financial statements. And again, make sure that everything is ready to go come tax season. But I would say this is probably a really critical asset that a lot of people are missing. And there's a lot of benefits to this. I've listed kind of a number of benefits here, but at a high level, again, we're trying to draw consistency across your financial statements. Make sure that you have a consistent language. Make sure that you have clear line of sight to your financial statements. And again, there's no surprises. We never like surprises. And to kind of go back to Cashflow Portal, how this works with Cashflow Portal is that Perry is very sensitive to these issues as well and working on a solution. And so what we're working on is an integrated system where not only do all these great financial reports that we're working on go out to you as the client, but they'll actually be integrated into Cashflow Portal so that you have a one-stop shop to not only look at all of your high-level investment management and investor management, but you can also start to look at more financial data, such as your profit and loss statements, your balance sheets, things like that, as well as relay that financial information to your investors so that investors real time can access on a monthly or quarterly basis to see where their rough tax numbers are from an income and loss perspective, as well as net asset value adjustments and things like that. Not a lot of other people are doing this. And so I think it's a really significant leg up on the competition for you as sponsors to be able to provide this kind of financial data real time to your investors, because I can tell you from experience, a lot of other people aren't doing it. So there's some really strong compatibilities here. I have a case study here that I want to feature. That this one is happened a few years ago, but I think really well showcases some of the challenges that we're seeing, especially across funds. And so this is a client of mine. They were operating a $50 million fund. It was a multi-asset fund with 5 different properties spread across different geographies. Asset size varies, but they tended to be around $10 to $15 million per asset. And they had about 100 limited partners with the general sponsor group. Each fund had a unique set of rules. So they had specific language relating to their operating agreement, to their preferred returns. They had different classes across each asset. Most of them had the traditional 3 asset class split, but some of them had more. So you had different waterfalls, different preferred returns. There were carried interest provisions on certain asset classes as well. And as I'm saying this, if you're getting lost, you can only imagine the sponsor, right, who had to track all of this. And so prior to engaging, they had an error rate of 12%. To put that in context, that's error rate specific to K1s. So that's what I would call the easy stuff. So when your investors just change their address, or, you know what, I invested as an individual and now I have an LLC, so I want to move my equity interest. Those tend to be the really low-hanging fruit and easily addressed issues. But because they had no formalized system, typically 12% of those submissions were missed, right? That's the easy stuff. You can only imagine what was happening on the tax and financial side with the more complex issues. Because of those kind of issues they had and the compatibility issues I referred to earlier, they had a delay on average of 4 to 8 weeks. Now, the reason I say average is we're looking over a 2 to 3 year span in this case. And so on average, they had a 4 to 8 week delay. Let's call it 2 months, which was a huge issue for them and for their investors, right? Investors are always saying, hey, will I get my K1s by April 15th? Sponsors typically love to say yes. And then the K1s come out in May. And so it makes the sponsor look bad. It makes the firm look bad. And they had a lot of issues with their investors, dealing with their investors, dealing with investor confidence. And then, of course, when it comes to reinvestment, those investors tend to be less prone to reinvest because they've had these kind of issues year on year. And in total, in this case, they ended up having about $20,000 of additional expenses every year, both due to remedial accounting issues, excess additional staff that they had to hire. And then there was actually an audit adjustment as well. I didn't include that here, but the audit adjustment was about $30,000 as well. And the key thing there is all of those costs were avoidable, right? But the problem is that they didn't get good advice. They didn't have good infrastructure. And so they were reacting to problems. And unfortunately, when you react to problems, you tend to have to fix it with large sums of money. And that's what happened here. And so post-integration, we came in there, we standardized their chart of accounts across the 5 assets. So not that, and that's no small task, right? You have 5 different assets. You have a pretty significant chart of accounts. Had everything standardized there. We had consolidated monthly reporting for this client, which they in turn relayed out to their investors. That immediately created some trust with the investors because, hey, we have sound financial management. I'm getting updates on a monthly basis. I can see how everything is working in the different funds. So that was really powerful. But more so than that, we were also able to make sure that we were able to hit a 315 delivery for that client the first year, which I'm very, very proud of. In terms of all the other detail, the waterfalls, the preferred returns, and the carry, that was something that was solved by a platform like Cashflow Portal, which does all of that tracking. For those of you who are not familiar with how those calculations work, they are incredibly complex and they get more complex, it seems, every year. And so I think it's very important to use a tool like Cashflow Portal to make sure that that's being tracked appropriately. Not only for your own benefit as sponsors, but also for your investors to make sure that you're doing everything appropriately. Centralized reporting, we got everything out on time, which was great. We had accurate K1s. We didn't have any audit adjustments. We had no notices, federal or state. State here being multiple states, because again, we're across different geographies. Got everything done by 315. We had clear investor transparency, which was significant. What I mean by that, again, we had 2023 data. that was being given to the client. So they had an idea of what their K1 would look like, and their K1 came out on time, and their K1 was consistent with the financial data that was reported to them throughout the year. So that was a huge boost of confidence for them. And at the end of the day, for the sponsor, they were able to save pretty significantly, not only on their immediate costs for remedial accounting, tax adjustments, things like that, but they were actually able to get additional efficiencies on a tax side, because now that we had coherent and consolidated financial statements, we were able to take more sophisticated tax positions. And I'll kind of just illustrate a really brief one that comes up a lot, especially with syndications and fund investments. But one of our largest line items tends to be capital expenditures, doing usually light value add renovation. And most of us are used to doing said light value add renovation, then coming in with a cost segregation study, parceling out all of those benefits, taking accelerated or bonus depreciation, and relaying that to our investors. There's nothing wrong with that. That's a fine strategy, but it's a more basic strategy. What we like to do, and what we did in this case, is we did what's called a fixed asset review every month. We looked at those renovations. We said, hey, what can we accelerate pursuant to the tax code? And whatever we couldn't, we then came in with a cost segregation. We cost segged it out. The benefit in this example of doing that is that when you sell that property, because we've expensed more of those assets than depreciated, we have less depreciation recapture, which is significant. We have capital gain that we pay at 20% versus depreciation recapture, which is as high as 37%. So even though you're selling the same asset, there's a 17% delta on savings when you sell the asset. And for large funds, this is a $50 million fund, that's very, very, very significant. It also allows you to start doing more sophisticated tax planning, which we have started to do with this fund, where we're going to sell one of those fund assets, trigger a large capital event and taxable income. But we're also going to work on getting our investors to reinvest into a new asset with bonus depreciation and neutralize all of that tax. It's a really sophisticated maneuver, but if you're able to execute it, it really helps create investor confidence, because you're starting to anticipate and deal with tax issues that they may not even know that they have. And so it tends to create very sticky relationships with your investors and with your clients, which of course is very positive. Moving on from this case study. Okay, PowerPoint. Moving on from the case study, one of the things I wanted to just really quickly highlight, again, the purpose of this kind of presentation is for me to talk about the bookkeeping integrations and why I think that's super valuable for everyone here as sponsors. It's not to say that you have to move all of your work over to us. So if you have a good relationship with your current tax preparer or CPA for tax purposes, we're not saying that you should move from them, or that you have to, I should say. We're simply saying that this is probably an issue that they're aware of, or it should be an issue that they're aware of. So you can integrate us in to help fix that issue. And if you want them to continue to do your taxes, that's fine. What I will say is that typically clients who work with us tend to really like us. And so they end up moving all of their tax stuff over. Tends to be a little bit more beneficial because all of your services are under one roof, one point of contact, and you have kind of a cohesive team on our side, which means you're not dealing with different people every month or every year. You have one point of contact, one team that kind of works with you. Again, our real estate expertise tends to be much deeper than most other CPAs and people out there. And then, of course, we have a proven track record of results, which I think is really important. Anybody can talk about what they can do and how great they are, but what really matters is the results and the action items that come out of it. We have a proven track record of success. We have a proven track record of deliverables, which I'm extremely proud of. And I think that speaks louder than anything here I can say. And then, of course, integration with Cash Flow Portal. And I think that for you as sponsors, our lives are busy enough. We're dealing with investors. We're managing a business. We're managing rental properties. We're doing our due diligence and underwriting properties. We don't want you to become a CPA. We don't want you to have to do all this work. And so having something like Cash Flow Portal with these integrations, I think is going to really behoove you, because it's going to take a large portion of work off of your plate. And so I think there's a lot of strong benefits there. But again, this is kind of an open flex program. And so those things are good opportunities, I think, for you, but they're not necessarily what I would call requirements. And finally, going into my last slide, we have kind of next steps. So how do I kind of go from here? You can certainly reach out to Cashflow Portal, schedule a demo so that you can kind of understand their tools and their interfacing a little bit more. You can, of course, book time with myself or anyone on my team through Cashflow Portal, or you can just reach out to us directly at VSVCPA.com. I'll have all the information on the back end. And from there, we can really have a good cohesive conversation about really what your needs are and how we can help with Cashflow Portal and kind of have a more tailored success plan for you and your investors, as well as your business. And with that, I have my information here. Oh, my picture is, there it is. I have my information here. Feel free to reach out, contact me. Again, you can either do so directly or through the Cashflow Portal platform. And I've carved out about 5 to 10 minutes just for questions, as I anticipate there may be many. So with that, I will turn it over to you, Perry.
Yeah, absolutely. Thank you, Kiyoshi. Right now, anyone, if you have questions, please you can unmute yourself and ask, or you can simply type it into the chat room. I will start with a question, Kiyoshi. You mentioned in a fund, this is more of an advanced question. You can, as you're selling each asset, you have this depreciation recapture, but then you can also buy one more asset into the fund to offset that. Does that make a fund more advantageous than a syndication in some sense from a tax preparation perspective?
Yeah, great question. Great question, Perry. It certainly does. Again, I think as entrepreneurs, one of the things we always want to do is anticipate problems. And when we sell a property, which is a good thing, one of the challenges tends to be there's a tax liability associated with it. And normally with a single syndication, that challenge is kind of left with the investor, and they're forced to work with their CPA to figure out alternatives. But the opportunity for people who are in a fund is that they can actually address that issue in advance and say, not only, hey, Perry, we sold this property, we're going to have a significant gain. You're going to have about $150,000 back in your pocket. And actually, we have this other asset lined up. And here's what we're looking at with this asset. Here's why we think it's compelling. And we're expecting a bonus yield of about 80%, which means that $100,000, $150,000 of gain, we can neutralize most of it, if not all. And so that's really powerful when you're talking to investors, because you're coming to them with a solution in hand. And hey, it's really easy to do because you already have a relationship with us. We already have your capital and we've already put everything in place. And so it's a really significant benefit that you can leverage with a fund versus a solo syndication.
Awesome. Thank you.
My pleasure.
Now we have a couple questions that come in.
Sure.
John Winnick asks, what is the cost?
Yeah, great question, John. So in terms of the cost for the monthly accounting statements, it's all based on the number of assets in the fund. I like to keep things simple, and Perry's a great negotiator. So he actually has discounted prices for everyone through Cashflow Portal. It comes out to about $150 a month per asset. So if I have a 2-asset fund, it's only $300 a month. 3 assets, $450, etc. So we try to keep it pretty cost friendly. Just again, we're trying to solve a problem here, trying to get everything lined up for tax season. And there are actually additional discounts that you're eligible for if you also bring your tax work over to us, because we're doing all the heavy lifting anyway.
Yeah, why don't you discuss the integration and the level of integration that your accounting firm has with Cashflow Portal, and then talk about the roadmap of how this integration might improve in the future.
Yeah, absolutely. So right now, the way I kind of think of us is as kind of middleman, right? You have a number of accounting systems within your business at the property manager level. And ultimately, that needs to go out to your investors, right? And so where we're positioned is in between Cashflow Portal and those underlying systems. So everything kind of goes through into us. We review, consolidate, and make everything kind of consistent. And then we integrate that with Cashflow Portal. And what I mean by that is we kind of generate those consolidated financial reports. We give that financial data over to Cashflow Portal, and then they update their internal systems with said data. So let's say we had $1 million of positive cash flow for Q2, right? We're going to go through, generate that data, review it, provide that data to Cashflow Portal, who's going to put it into Cashflow Portal. They're going to show whatever the ratable or pro percentage increase is to all of your investors, who can then see it real time. So that's really what that integration looks like now, if that makes sense.
So on the chat here, let me go to the one about the cost as well. Does the cost include the year-end reporting K1 and bookkeeping, or how does that break down?
Yep. So the pricing is specific for the integrated accounting services. It does not include tax preparation, so Schedule K1s and tax returns. For those, we tend to have to kind of look at just what you're doing. It does range on the tax side. It does really range based on a few factors. The most notable ones being obviously the size of the assets, the number of assets, the states that you're in. So if you have 5 assets in one state, it's considerably easier than if you have 5 assets in 5 states, as well as just the general complexity of the deal. If you're doing kind of a standard fund model, it tends to be more baseline. The reason I'm saying that is because I have some other clients who do QOZ funds. So they have both a traditional kind of syndication model built in with a qualified opportunity zone built in, and then some of them are exploring other things. So just there's more complexity there. But I'm happy to kind of book a call and go through your stuff. And again, we have discounted services for clients who are leveraging both service lines.
Kiyoshi, you can also put your demo link in the chat, and then I'll go to the next question. What is the average number of investors you prepare K1s for your current clients? We have over 1,200 clients, 1,200 investors across about 9 to 11 deals.
So I'm not sure if you're referring to like just by LLC or project basis, or just kind of by client.
Number of investors that your current clients have. What's the average number of investors? Because this customer has 1,200 investors, which is a lot of investors.
Yeah, I would say it's probably in the 1,000 to 1,500 range. There's certainly some outliers. So I can tell you that there's 2 that we signed last week that are about 50 investors per deal. So obviously a little bit smaller than that. And then I have another client they've been around since the 90s. I think they have over 3,000 investors who just kind of circulate in and out. So you kind of have extremes on both ends, but I would say about 1,000 is probably 1,000 to 1,500 is probably average.
Yeah. So this is like the great avatar in this case. You can more than serve that.
Yes. Okay. Yeah, we're very comfortable with that. Like I said, we've been working with investment and syndication firms now for well over a decade. It's not by accident. We've earned their trust, and they've referred us to other investment firms. We understand that when they work with us, their reputation is on the line as well as ours. And so we take that very seriously. Again, our track record, it's not a mistake. It's not a happenstance. It's not luck. It's planning and it's execution.
I love that. All right. Next question is, this is actually really cool. Really good question. What if you are doing fund of funds, like customizable funds? That would that change the cost if you're not producing the K1 for each investment, but you're creating a consolidated K1 for each investor that end up investing, say, in 3 assets?
Yeah, great question. I'm going to split that into 2 pieces. So first, there's kind of the accounting integration side that we were referring to earlier. Now, for that side, I would say no. The reason being is even though you're not the direct sponsor in some of those deals, your investors still want all of that data. And so for those clients, what we typically do is we'll still reach out to the sponsor of that other fund deal so we can extract financial data, again, consolidate it, make sure that it's adjusted correctly, and then provide that to you as the fund operator that you can then give to your investors. If you're not doing that, the challenge tends to be all you're doing is looking at distributions and cash flow. And while that's helpful, that doesn't answer a lot of investor questions around, hey, what is my tax going to be? Or what is the sale event going to be? Or what's depreciation recapture? You can't really answer any of those questions. You can just say, you know what, you received $1,000 this year. So because of that, we do a lot more comprehensive services for the indirect funds to address that question. On the tax side, it is a lower cost because, again, we're getting a Schedule K1. We still have to make sure that K1 is accurate and that we're reporting it correctly, but the amount of work on the tax side is less, so the fees are less.
Excellent questions, everyone. Any questions?
I threw a link to our website down there. If you guys are interested, you can schedule a free consultation with me. I can give you more exact pricing there as well. And then if you have questions that maybe you want to ask one-on-one, please reach out. I love real estate, love talking about real estate, so always enjoyable.
Yeah. What I like about VSV is we know them for some time. We are a investor portal. We care a lot about excellence. And we feel that that energy and that vibe are very much the same. So it's really good to hear that VSV CPA, did all the K1s on time. That's really amazing, and we strive for the same. And there's gonna be more efficiency once you combine the two services, meaning that you go to one vendor, and then you can be sure that the numbers are correct and we are showing it to the investors correctly. Now, a lot of times with those things, the waterfalls and the distributions, which whether doing syndications of funds, are actually provided by the investor portal. So by definition, the waterfalls and kind of the financials are very much integrated. So you kind of need both in order to achieve the end result, which is showing the right financials to your LPs. Even if you're doing a customizable fund, like Kiyoshi said, a LP gets a $100,000 distribution, but they have no idea what part of it is bonus depreciation, what part of it can be, accelerate, what part of it is actually cost basis, and so on. So you do need to get the financials from the underlying funds and then produce this consolidated statement and show that to the LP. And that's the part that's missing. And there's a handful of CPAs that know real estate as well as VSV, and they have the excellence and the timeliness of VSV. There are also other CPAs that may not provide the correct financial statements. And so we really like VSV because you can trust the numbers. That's probably the most important part. If you give them the K1s, if you give your LPs the K1s and they don't trust the numbers, the backlash is going to be strong. You don't want to go back to your CPA and change the numbers.
Well said, Perry.
Yeah. Cool. If people have no questions, I think that's pretty much it. Maybe we'll give it another. Any more questions? If you want to unmute yourself, or if you want to just comment on if this is useful for you folks, you can put it in the chat as well, or reach out to Kiyoshi afterwards. Reach out to us afterwards.
Well, awesome. Appreciate the spotlight, Perry, and pleasure to meet everyone. I'll turn host over to you, and looking forward to chatting more.
I appreciate it. Thank you, everyone. All right. I think that's pretty much it. Thanks for coming. Bye-bye.